Hello, I'm Brian Rezny, president of Rezny Wealth Management, a fee-only fiduciary money management firm. At Rezny Wealth, we focus on companies with strong competitive moats, accelerating earnings, and long-term appreciation potential. And Alphabet, the parent company of Google, checks every box. It's one of our core portfolio holdings, and we remain bullish on its future. The reasons: AI integration, robust ad revenue, and explosive growth potential in cloud computing. Let's start with the foundation, advertising. Alphabet's core business, Google Search and YouTube, remains a high-margin powerhouse. Google controls over 90% of global search, and YouTube continues to grow, with ad revenue up 15% year over year in Q3 2025. AI is making ads even smarter. With Gemini AI integrated into search, ad relevance and click-through rates are rising in some tests by 20 to 30%, and diversification is working. Non-search ads like YouTube and Google Network now make up 30% of total ad revenue. That kind of balance creates massive free cash flow, over $70 billion a year, fueling innovation and future growth. Now let's talk about the future, AI and cloud. Alphabet's Google Cloud Platform and Gemini AI are transforming the company from an ad giant into a global technology leader. By late 2025, Google Cloud and YouTube combined surpassed $100 billion in annualized revenue, up 25% year over year. The cloud division now has a $157 billion backlog, growing nearly 30% annually. And with Google's custom-built TPUs, margins are climbing now at 12% and expanding. Gemini 2.5 Pro, launched in early 2025, is powering enterprise tools and subscriptions, while partnerships with 60% of Fortune 500 companies strengthen its dominance. Even Waymo, Alphabet's autonomous driving arm, is integrating Gemini to advance self-driving AI, adding new long-term revenue streams. Alphabet's earnings story is accelerating. In Q3 2025, EPS jumped 32% year over year, beating estimates by a wide margin. Operating margins hit 28%, and AI efficiencies are pushing that toward 32% by 2027. Analysts project 22% earnings growth annually, but our internal models suggest 25% or more, thanks to Gemini's monetization. Alphabet's $80 billion in projected free cash flow supports buybacks, dividends, and continued innovation. That's the kind of flywheel that keeps driving earnings, 15 to 20% annual stock appreciation. Alphabet stock has surged 47% year to date, helped by a major legal win that dismissed antitrust claims. But even after that rally, it's still undervalued. Right now, Alphabet trades at 24 times forward earnings, below its 5-year average of 28. We believe it has room to run. Our research suggests the stock could reach $250 or higher by 2027. And with catalysts like the Gemini 3.0 rollout in early 2026 and continued cloud growth, investors could see another 15 to 20% annualized return plus dividends. At Rezny Wealth Management, our stake in Alphabet reflects what we look for in every investment: innovation, discipline, and compounding growth. Alphabet combines the stability of advertising with the upside of AI, cloud, and automation. It's a company turning technological shifts into lasting value, and we believe it's just getting started. That's why we maintain a buy rating and see Alphabet as a cornerstone for growth-oriented portfolios. If your advisor is giving you set-it-and-forget-it advice while missing real opportunities like this, it's time for a change. At Rezny Wealth Management, we provide active, adaptive, and fiduciary-driven portfolio management that works in your best interest. Visit ReznyWealth.com to schedule your consultation today.